Have you ever looked at a stock chart and felt like you were trying to read a foreign language? Well, what if I told you there's a trading strategy that's so simple you can get the hang of it in the next few minutes, but it's also so powerful it has a proven 65% win rate? Let's dive in and break it all down. So, right off the bat, let's get one thing straight. You might think you need to be some kind of market wizard to make money trading, but our source material makes it clear that's just not true. This isn't about being an expert, it's about having a solid, simple plan. This idea is really the heart and soul of the whole strategy we're about to unpack. And look, simple does not mean weak. This 65% win rate you're looking at, that's not some made-up number. It's the real result from backtesting this exact strategy on a major currency pair over 4 years. You know, in the world of trading, a consistent 65% win rate, well, that's the kind of thing that makes even the pros lean in a little closer. Ready to get into it? Okay, here's our game plan. First, we'll look at the big picture of the strategy itself. Then, we're going to zero in on the one and only tool you're going to need. After that, I'll walk you through the 4 simple steps for a buy setup. And, crucially, we'll cover the rules to keep you safe. Finally, we'll look at some real examples and the hard data that proves this thing actually works. Let's get to it. So what we're really doing here is taking these big, sometimes confusing concepts that professional traders use, things like trends, momentum, and pullbacks, and we're boiling them all down into a super simple step-by-step plan. The goal? No more guessing, just a clear path to follow every single time. Now for the best part, the secret to why this is so simple. You can forget about cluttering up your charts with a dozen different confusing indicators. For this strategy, you only need one. That's it, just one single tool. And here it is, the 50 EMA. That stands for the 50-day exponential moving average. The easiest way to think of it is like a smart average. It looks at the average price over the last 50 days, but, and this is key, it pays more attention to what's been happening recently. This makes it really good at showing you the market's current direction. It's kind of like a guide telling you which way the river is flowing right now.
Okay, this is where it all comes together. We are about to walk through the exact 4-step checklist for entering a buy trade. No gut feelings, no maybes, just a simple, repeatable process.
All right, let's break this down piece by piece. Step 1, you need the price to clearly break and, importantly, close above that 50 EMA line. That's our signal that buyers are stepping in. Step 2, we wait. We need to see a small pullback, specifically at least 2 red candles in a row. This is so important because we don't want to chase the price at the very top. This gives us a chance to get in at a better price. Step 3, find the highest point right before that pullback started and draw a horizontal line there. That's your trigger line. And finally, step 4, you only pull the trigger and buy when a candle's body closes above that line. That's our confirmation that the buyers are back and ready to push the price higher. Now let's talk about the most important thing, protecting your money. No strategy wins 100% of the time, which is why a stop loss is non-negotiable. The source material recommends an indicator called the chandelier stop. What's brilliant about this tool is that it automatically moves your stop loss up as the price goes in your favor, which helps lock in profits while still giving the trade some room to work. It's basically like having a personal risk manager right on your chart. You know, one of the biggest secrets in trading is that knowing when not to trade is just as important as knowing when to trade. So this strategy has a couple of simple but critical rules designed to keep you out of bad situations. Think of them as your guardrails. So what do you do when a setup looks pretty good but not perfect? This is a trap that so many new traders fall into. And the answer is simple. Almost is not good enough. If the setup doesn't take every single one of the boxes, you just walk away. It's that simple. In trading, patience is everything. Here are your 2 major red flags. First, if during that little pullback, the price dips all the way back down below the 50 EMA line, the trade is off. Canceled. It means the buyers lost control. Second, if the candle that breaks your trigger line is a massive monster candle, like way bigger than all the recent ones, you stay away. It might look really exciting, but it's often a sign that the move is already exhausted and about to reverse.
All right, enough theory. Let's see how this thing actually looks on a real chart. We'll take a quick look at how it works for sell trades, and then we'll analyze some real-world examples. It's time to put this all into practice.
And the beautiful thing is, this strategy is perfectly symmetrical. If you want to make a sell trade, you just flip every single rule. Instead of a break above the 50 EMA, you look for a break below it. Instead of waiting for a pullback of red candles, You wait for a pullback of green ones. It's the exact same simple logic, just in reverse.
Okay, check this out. This is a picture-perfect example on the USD/CAD chart. See that? We get the break and close above the 50 EMA. Boom, step 1 is done. Then we get our 2 red candles for the pullback. Perfect, step 2. The trigger line is drawn at the high, and then we get that solid breakout candle closing above it. And the result? A clean, profitable trade. This is exactly what it looks like when all the pieces fall into place.
Now, this next example is just as important, maybe even more so. Here, the setup started to form. It looked promising, but then the price dipped back below the 50 EMA. This is where discipline kicks in. By sticking to the rules and invalidating this trade, you would have sidestepped a losing position. This is a perfect example of how the rules are there to protect your capital. So, we've seen the strategy, we've gone over the rules, we've looked at examples, but the big question remains, does it actually work over the long run? Well, let's look at the numbers, because the data doesn't lie. Here you go, the results from a 4-year back test on the Aussie-Yen currency pair. Out of 32 trades that met the criteria, 21 of them were winners. That is a 65% win rate. And to put that into real-world terms, if you had risked just $100 on each of those trades, you would have made a net profit of over $1,000. This isn't just a theory. It's a strategy with a proven statistical edge. And that really is the bottom line. You do not need some crazy, complicated system to be a successful trader. You just need a simple plan that has an edge, and then you need the discipline to follow that plan every single time. This is a powerful reminder that in trading, simplicity and consistency are your 2 best friends. So, you now have a complete, proven trading plan. You've got the tool, you've got the 4 steps, and you've got the safety rules. The only piece missing from this puzzle is you. So the question I have for you is this. What is the first step you will take today to start building the discipline to trade this strategy effectively? Don't just learn this plan. Use it. Your trading journey can start right now.